So we're going to talk about deductible business expenses. This is a very important definition and concept to understand. This is the way that you and the IRS will determine if the expenses that you're using to reduce your taxable income are allowable business expenses and tax deductions. If there's one thing you take away from this entire course, it's this concept. So make sure you keep it in mind before you swipe that card at the register. Now, per the IRS, to be deductible, a business expense must be ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business, and a necessary expense is one that is helpful and appropriate for your trade or business. And an expense does not have to be indispensable to be considered necessary. So ordinary and necessary are the words to focus on when determining deductibility of expenses. The expense must be common or usual and an acceptable or customary expense for one's business. Ordinary is a bit easier to demonstrate. For example, if a CPA has an expense for ski boots on his tax return as a business expense, that would not pass an audit because ski boots are not an ordinary business expense for CPAs. Now, if he was a ski instructor, those ski boots are deductible because they are a common and acceptable expense. Necessary is a little harder to define, but by definition, the expense doesn't have to be absolutely necessary to the operation of the business. But the expense does need to be helpful and appropriate. So for example, office rent for a CPA firm is a necessary business expense. Even though the rent is not absolutely necessary and the CPA firm could operate without an office space, the expense is helpful to the practice, so it would be treated as a business expense. But the Xbox that you purchase because gaming helps you de-stress from owning your own small business is not a deductible business expense because it's not necessary. And neither are those spa appointments.